everything going on today in the market, with high mortgage rates, looming tariffs, and political uncertainty, some folks are saying it's going to be another 2008. Is the housing market going to bust? So let's take a step back and talk about what's happening in the U.S. right now with the housing market. As of April 2025, several U.S. housing markets are experiencing declines due to a combination of factors, such as increased inventory, affordability challenges, and economic shifts. So let's go through the quick overview of some of the key areas that are facing downturns. The first one that we've heard, it's been all over the news everywhere if you're watching TV, Florida. There was a record 168,000 or so properties that were listed for sale in February alone, marking a 40% increase from the previous year. So rising insurance costs are part of the reason. There's been a huge increase in flood insurance premiums and HOA fees that are making home ownership less affordable. The state's homeowners insurance premiums have escalated, partly due to stricter regulations following the Surfside condo collapse, which was just awful. These regulations have led to higher HOA fees and special assessments, particularly affecting condo markets. Some properties are now remaining on the market for over a year due to these increased costs. So because all these fees have gone up, there is now an oversupply of condos. They have a supply in the Fort Lauderdale area of up to 10 months. That's more than double the average. And because things aren't selling, there's price reductions. And in some areas, the median listing prices have dropped by 13%. And when this happens, this indicates that the market is cooling down there for sure. So the domestic migration there has significantly decreased. It dropped from about 317,000 people in 2022 to just about 63,000 at the end of 2024. So this decline really suggests that the state's appeal among U.S. residents may be waning, and that also impacts the housing demand. Another housing market we hear a lot about is California. And when people hear California, what do they think? High costs and high taxes. Elevated state taxes and living expenses are really prompting residents to relocate. California continues to have some of the highest median home prices in the nation. Areas like San Francisco have a median home price of $975,000, and Los Angeles, it's about $800,000. These elevated prices make home ownership increasingly out of reach for many potential buyers. Another thing that's happening in California is the shift to remote work has really reduced the necessity to live near a major urban center. So people are moving away from these big cities. So this contributes to homes sitting on the market longer because less people are looking to buy there. And in general, there's a decreasing job market. Some sectors are experiencing layoffs or slow growth, affecting the housing demand. The job growth has been sluggish in the Bay Area, having fewer jobs in 2024 than they did in 2019. And this is largely due to tech industry layoffs. So what happens is that this weak job market reduces income growth and job stability. And these factors really discourage potential homebuyers from entering the market, and rightly so. And they've also seen a population decline there. Out-migration is leading to reduced demand for housing in certain areas, on top of the job declines and climate migration. Many people are leaving California because of wildfires. The good news is we can all take a deep sigh of relief because most experts agree that 2025 is not shaping up to be another 2008 style housing crash. So why are they saying that? Well, number one, there's stronger lending standards now than there were in 2008. Risky subprime loans were handed out with little regard for creditworthiness back then. Today, mortgage underwriting is much stricter, and borrowers generally have higher credit scores, better debt-to-income ratios, and are more qualified. So default risk is much lower than it was pre-crash. And think about this, homeowners have record equity nowadays. Thanks to years of price appreciation, U.S. homeowners have $30 trillion, yes, that's $30 trillion in equity. Even if the prices dip, most people won't owe more than their home is worth, which significantly reduces the chance of widespread foreclosures or short sales. And on top of this, inventory remains historically low. In 2008, there was a glut of new construction that vastly outpaced demand. And now in 2025, we're still facing a housing shortage, especially for affordable and entry-level homes. So low supply equals support for home prices. There's not going to be some massive wave of foreclosures. In 2008, adjustable rate mortgages reset and millions of borrowers defaulted at once. Today, delinquency rates are very low, and even with rising rates, most homeowners are locked into low fixed rate mortgages from prior years. And though mortgage rates are high, they are stable. While 7% mortgage rates have cooled buyer demand, they've also slowed price growth, preventing runaway appreciation. So what we're seeing right now is really a correction, not a crash, especially in these overheated markets I discussed earlier. Plus, there's plenty of government oversight and regulation that wasn't here in 2008. For example, the Consumer Financial Protection Bureau and Fannie Mae and Freddie Mac have really tightened the standards to help prevent predatory lending. There's definitely more transparency and consumer protection than there was to the run-up to 2008. So like I said, we're seeing regional corrections and not a national crash. Now let's bring it back to what we're seeing here in our tiny state of Connecticut. So we have some great news here. Connecticut's housing market in 2025 is not expected to crash, and in fact, it's considered one of the strongest markets in the US. Here's why our housing market remains so resilient. And I've stated this in prior videos, but strong demand versus low supply. There is a persistent housing shortage in Connecticut. Inventory is down 13% year over year, with fewer than 7,000 active listings statewide. So this tight supply is keeping upward pressure on prices, even as mortgage rates remain elevated. And as I've stated before, we would need 110,000 units in the state of Connecticut to meet the demand we have currently. Prices here are still rising and not falling. As of early 2025, the median sale price in Connecticut hit $415,000, which was an 11% increase from the previous year. Strong appreciation like this is a sign of market confidence, not a bubble. And we continue to have healthy buyer activity despite these high interest rates. Home sales are up nearly 5% year over year, showing that buyers are still entering the market. A crash typically happens when buyers disappear, and that is certainly not happening in Connecticut. And I know some of you might laugh, but we are affordable compared to our neighboring states. When you look at New York and Massachusetts, Connecticut offers more affordable housing, especially in places like Hartford and New Haven. This affordability has attracted out-of-state buyers and remote workers, which is boosting demand. And since the pandemic, there's been a shift of people leaving big cities for more space and affordability, and Connecticut checks those boxes, especially for people looking to leave New York City. Demand from remote workers and New York City area commuters continues to support our strong market here. And if that wasn't enough, we have limited new construction. Connecticut has seen limited housing development for many, many years now. Markets tend to crash when there's overbuilding and oversupply, and Connecticut doesn't have either one of those right now. Connecticut's housing market is sustained by real demand, affordability advantages, and limited inventory. With no signs of oversupply or major economic distress, there's little reason to expect a crash here in 2025. So with all that great news about the Connecticut housing market, are you thinking about moving here? Please reach out. I'd love to help. Or if you're just looking for a great realtor in your area, reach out because I'm connected to agents all over this country. Please leave me a comment. I love to know your thoughts. And until next time, have a great day.